Hey guys, so Ron here once again. Today I wanted to share my top 7 tips that have helped me as a trader, and I think they will help you. So let's get straight to it. Number 7 tip. My number 7 tip for you is continuing education. I know I've said it before. A lot of people keep saying it. It sounds redundant, but guys, repetition, and definitely will sink in for you if you continue your education. You have to continue reading books. You have to immerse yourself in the craft and the study and whatever it is that you're trying to do. In this case, trading, you have to immerse yourself in it. And continuing education is the way to do it. I'm constantly reading new books, looking at new videos, looking at the way other traders trade. You know, you never know what you're going to learn. You'd be surprised what you're going to learn from other people, even those you don't think you will. Number 6, guys. For number 6, the one thing I'd like to share with you is a good mental workout. And again, actually, you know, this may sound a little, again, redundant. I just said continuing education. Now we're jumping into mental workout. What I mean by this is every morning I try to do something that's gonna get my mind pumped for the day. You know, this is one of those things that you just constantly have to make sure you keep at it. So, you know, motivational video, read a book, audiobook, podcast, anything like that that'll get you ready and your mind just pumped and ready so you are at a good mental state. Good morning. For number 5, I like to get up, make sure that I get a good workout. You know, it's one of those things that, you know, just pump me up for the day, keep my body energized, keep me energized, get my mind at ease. And, you know, I know I said those in a separate order. Normally I do my workout before I do my mental stuff. But either way you do these, is just make sure you do these. And I know that the time zones are different for everybody. We have people all around the world, so you may not be able to do it right before the market opens, but making it a point to create a routine for yourself is definitely going to help. One of the things I like to point out is, you know, it may be coincidence, but I don't know, every time I run 3 miles, I tend to do better. And if it is a coincidence, then shoot, you know what? I'm gonna make sure I run 3 miles as much as possible before I start trading. Tip number 4 I like to say is preparation, guys. Prepare. It's key, it's crucial to plan ahead for anything that may or may not happen. It's crucial to study and see what could and could not happen so that you're ready for whatever happens, if that makes sense. And I know, I'm repeating myself. I just put it out in the video before this one, and I said, guys, you know, planning for both sides is crucial. You have to plan to trade in whichever way the stock wants to go, in whichever way the market wants to go. I don't want to fight the market. Why not? Why not make money when the market is going up and make money when the market is going down? That's all I'm saying, is let's plan accordingly so that way we get the best entries whenever possible and we execute the way we should be executing on a regular basis. That way we keep our accounts growing and growing and growing. Number 3, guys, this one I haven't talked too much about before, but as your account grows, I like to call this one stay above key levels. And what do I mean by that? What I mean is, as your account grows, guys, keep your account above certain levels. I was just on a call with another trader. I had a 20-minute coaching call, and he told me he took his account from 500 to 13,000 in a matter of a week and a half. And I'm like, oh man, that's awesome. That's awesome work. Now, again, guys, that's not the norm. Don't expect that that's the way you're going to do that. I know I've shown it myself a couple of times that you can do that. That's not the norm. But as you reach these new levels, so again, your account went from 1,000, from 500 to 1,400, 1,400 to 4,000 or 5,000, 5,000 to 10,000, 10,000 to 13,000. You need to keep your account at key levels. And what I mean by that is, if you doubled your account, let's say you took your account from 5,000 to 10,000, now it's at 13 or 15,000, etc. Make sure you set yourself key levels where you are not going to let the account come below that level. And what do I mean by that? It means that don't let euphoria kick in and all of a sudden, because you had to put in more at risk because your account was smaller, that you keep that habit, that bad habit of putting your entire account at work when you only need to put a little bit of money at work. Remember, it only took $500 to make $1,400, $1,000 plus per day. You know, why all of a sudden are you going to put $10,000 at risk? So what I mean by that, if your account all of a sudden is at 13,000 from when it started well below that, you need to keep in mind that, hey, you know what? Maybe I'll keep my account above 10,000 and I'll only use the money that's above it. You know what I mean? Keeping it within a specific standard. You know, use no more than 5, 10, 20, or 30% of the account at any given time to put in any trades. Again, I normally like to say use no more than 5% allocation, but it depends on the situation. I'm not gonna tell you that I always do exactly 5%, so because I manage accordingly, and I've shown recently how to go about doing that. So that's what I mean by staying above key levels, guys. As your account grows, make sure that your buying power, your options buying power, your overall buying power has enough cash that it's above that key level, so that your account, make sure is still growing. So no matter what, even if you lose today, you can say, you know what, I'm having a bad day, cut those and then start again. Remember, you didn't have to put so much money at work, so don't let euphoria kick in and take all your money back from you. For number 2 tip of the day, I like to say, guys, is don't trade your bills. And what do I mean by this? What I mean is, don't trade your next bill, your next vacation, your car note, your mortgage. Don't trade your bills and that number as your goal. So for example, if you have a $750 bill that is due, don't come into the market looking to make that $750. Don't come to the markets looking to make that $3,000 you need for that vacation you want to take this weekend, or that vacation you just paid for and you was like, let me just pay for that vacation with today's trade. Don't trade like that. You know why? Because the problem with trading with your bills or trading with a specific number in mind means that you're ignoring what's going on. You're ignoring the charts. You're ignoring the right edge of the chart and what the market's telling you. And what happens is, now you are so focused on the numbers that you ignore everything else. And you go from having a green day to having a bad day because you were too stubborn to let the trade play out or take profits at the key levels and execute the plan that you actually planned out. You know what I mean? So you failed to execute the plan that you set for yourself. So that's tip number 2. For tip number 1, guys, and this is the most important for me, is, and it pretty much encompasses all the ones before, is stay in control. And what do I mean by that? It's just as it sounds, guys. Stay in control. Don't let yourself be emotional. Don't let yourself be overly influenced by others. Don't let yourself go out of your way and stay astray from the path that you set for yourself, the plan. You know what I mean? Don't fall for, oh my God, this one is breaking out. Don't fall for FOMO. Don't fall for the things that you've known have made you fail in the past. Stay focused. If you miss the trade for the day, stay away from the trade. Just stay away. Wait for tomorrow. Tomorrow's another day. Think about it like this, guys. I'm pretty sure most of you that are watching these videos have had plenty of days where you've had like a massive, awesome day where you've doubled your account in a day, tripled your account in a day, things like that, where you just had a really, really good day. Think about it like this. How many days like that do you really need per month to consider yourself like, hey man, I'm doing really well? You know what I mean? I can pay myself a little bit extra. I can take a little bit of money out. My account will keep growing. So think about it. Think about that. What happened on those days that you did so well? And if you go back and you study those days and you go back and you study your actions, you'll notice that it was just an easy day to trade. It was just easy. It was an easy, and again, I'm saying it, guys, it was an easy day to trade. Those are the days you're looking for. And again, that's what the box-in strategy focuses on. Focus on the easy days to trade, the easy trades. You don't want chop. You don't want those days that don't work. You need to be able to identify when it's going to be a choppy day. We got it. You know what I mean? You need to be able to identify the tools and the things that are going to tell you what kind of day today is going to be. And again, you have to have all of those tools in mind. Keep them, have your scan so that you know what you're looking for. And then you stay in control and you execute. And the day is not for you. Cut it. And tomorrow's another day. And that's all, guys. Those are my 7 top tips that have helped me. I hope they will help you. And I will see you guys on the next one.
More money, more money!